Different parts of the triple bottom chart pattern. 1. Top 1. 2. Top 2. 3. Top 3. For neckline, support. How a triple top pattern is formed. The formation of the triple top pattern begins when the price rises and hits a resistance level, retreats, and then returns to test the resistance again, forming the first two tops. After failing to break through the resistance for the second time, the price pulls back again before making one final attempt to break through the level. However, it is again rejected, and the price falls below the support level, completing the triple top pattern. The three peaks are roughly equal in height and are spaced. The time between the peaks ranges from a few weeks to several months. The volume pattern typically diminishes with each successive peak. The decreased volume shows waning buying pressure as the tops form. After the third peak, volume picks up as sellers take control and drive the price below support. The break of support signals that demand has weakened and the balance has tipped from bullish to bearish sentiment. Sellers have gained control, and any buyers who enter the market are quickly overwhelmed by selling pressure. This new supply drives the price lower. The break of support validates the pattern and confirms the downtrend. How to identify a triple top pattern? Prior trend. With any reversal pattern, there should be an existing trend to reverse. In the case of the triple top reversal, an uptrend should precede the formation. 3 highs. All 3 highs should be reasonably equal, well spaced, and mark clear turning points to establish resistance. The highs do not have to be exactly equal, but should be reasonably equivalent to each other. Neckline, support. The support level of the pattern is the most recent swing low following the second peak, or alternatively, a trader could connect the swing lows between the peaks with a trend line. Support break. As with many other reversal patterns, the triple top reversal is not complete until a support break. The lowest point of the formation, which would be the lowest of the intermittent lows, marks this key support level. Volume. As the triple top reversal develops, overall volume levels usually decline. Volume sometimes increases near the highs. After the third high, an expansion of volume on the subsequent decline and at the support break greatly reinforces the soundness of the pattern. Price target. The distance from the support break to the highs can be measured and subtracted from the support break for a price target. The longer the pattern develops, the more significant the ultimate break. Advantages and disadvantages of the triple top pattern. Advantages. The triple top pattern is a reasonably clear and easily recognizable reversal pattern. It can signal the end of an uptrend and the potential start of a downtrend. The triple top pattern is a reasonably clear and easily recognizable reversal pattern. The profit target can easily be measured. Disadvantages. The pattern may not always be reliable and may produce false signals. Sometimes it's not clearly recognizable. Requires confirmation by a break below the support level, which may not always occur. The pattern may not always lead to a strong move in the opposite direction. Traders need to pay attention to the overall market conditions and the fundamentals of the underlying stock or asset. How to trade the triple top pattern. First, you can wait for the price to cross below the neckline, which would confirm the triple top pattern and perhaps signal a trend reversal. You can start a short trade or sell position after the break happens. To reduce risk, think about placing a stop-loss order above the most recent swing high. You can also project the vertical distance between the neckline and the highest peak downward from the neckline to determine your profit target. What time frames work best with the triple top pattern? The triple top pattern can appear on any time frame, but it tends to be more reliable when identified on higher time frames such as for hourly, daily, and weekly. This is because the pattern requires multiple highs to form, and this takes more time to occur on higher time frames, and those time frames provide a more accurate picture of the trend and market conditions.